One question that comes up in everybody's mind is why is it whenever anything is announced about China from a strategic viewpoint, there's always regarded as bad, even if it sounds good. Do you have any comments to that?
I'm not sure that's true. I wouldn't accept the premise, but I think the underlying reason is that China is a very big deal. It's a very big deal in the global economy. It accounts for about half of global growth at the moment, so people are very much focused on how the economy is doing. And strategically, it's a very big deal in Asia. Its defence forces are growing very fast. Its defence budget is going up by 12% a year. And it's natural that the countries around the region look at it with some nervousness as well as interest as to what sort of great power China is going to be, because it's a new player on the block. It's been there for centuries, obviously, but there's been a stability, more or less, in the Asia-Pacific for 40 years based on what has in effect been a US-led world order. And China's emergence threatens to unsettle that. So naturally, both on the economic and strategic terms, there's an enormous amount of interest in what China does.
Yes, interest is one thing we notice, but we also see significant investment going into China by countries surrounding China, and at the same time they're not dependent on China for defense.
That's right. I mean, it's one of the big paradoxes of the world at the moment is that you have, in Asia in particular, you have countries that are increasingly economically interlinked with China, both through investment and particularly through trade. China's the biggest trading partner for South Korea, Japan, Taiwan, for Australia. It's close to the biggest trading partner for most of Southeast Asia as well. And yet, none of those countries are strategically Chinese allies. Most are dependent for their defense on the other side of the Pacific, on the United States. And this is something we've never seen in the world before, it seems to me, that we've had where you have this dichotomy between the economic linkages and the security guarantees. And it may be that this turns out to be a very stable state of affairs, but we don't know that.
Absolutely. Yes, indeed an interesting observation, but I'm just wondering if going forward, looking at the quantum of investment that has gone into China and will continue to go into China, what impact that will have on the renminbi, because that too is tied to the dependence of these countries to China.
Well, it's interesting, isn't it, looking at the currency? I mean, one of the things that came out of the panel discussion was that of our three panelists, two believed that the renminbi is in fact significantly overvalued. This runs counter to a common perception that China has for years been manipulating the value of its currency down in order to sustain exports and has been gaining an artificial advantage through that. In fact, in real terms, the currency has been strengthening for a long time because of high inflation rates at home. In comparative terms, the renminbi has been getting stronger. And of course, over the last year, it's actually gotten stronger in terms of its official rate as well. Now, recently, signs that the renminbi is weakening again has caused some alarm because countries like Japan, like South Korea, which compete with China in export markets, begin to wonder about their own competitive advantage and seeing that China still has the ability basically to manipulate the level of its currency, that it's trying to steal a march on them. So I would expect over the long term that we would see the renminbi come down again, but I expect we will also see other countries and the United States complaining about it quite a lot.
Do you see it being a de facto reference currency in Asia?
I think that's quite a long way off. I mean, it's one prerequisite of that would be significant liberalisation and opening of China's capital account. Now, on the panel, one of our panelists thought that might happen this year. I'm not so sure. I think they would be quite nervous about doing that because with the opening of the capital account comes a loss of control, probably a significant immediate outflow of money that people want to get out of the country, and they would be quite alarmed by the prospects of that. But eventually, yes, the renminbi will become a reference currency, will become a reserve currency throughout Asia. Already increasing amounts of trade are denominated in it, increasing amounts of the currency are traded in various centres, including now in Europe. So it is, sooner or later, it's going to become a reserve currency, but it's not there yet.
20 years ago, we didn't see China here. 20 years from today, where do you see China?
It's always very difficult, isn't it, to avoid the peril of straight line predictions with China. And if you think we have had more or less a straight line in Chinese growth since 1978, there was a blip in the late 80s, 1989, around the time of the Tiananmen protests, where things seemed suddenly to go off the rails, and one wondered whether the whole system could survive. So the temptation is to say, 20 years' time, China will be like the China it is today, only vastly transformed, far wealthier, far bigger, far more powerful. There's a doubt in my mind about that, however. This is an experiment that has never been tried before. To grow a country as big as that under a one-party system that is basically ruled by what in most parts of the world looks like an archaic and unmanageable Communist Party system. Whether they can pull it off is a big question.
Interesting. Thank you very much, Simon.
Thank you, Noor.
Only time will tell. Thank you.